Morning, everyone. My name is Eric Walters. I'm a managing partner at Summit Hill Wealth Management. We are a financial planning and investment advisory firm. We help business owners and executives retire and enjoy their lifestyle. I am excited to be joined by Aaron and Ryan. I'll introduce them in a second. And our topic today is to discuss what the heck is going on with home and auto insurance rates. As we said in our invitation, if you have renewed your insurance recently, or if you're like myself and you have clients, you've probably heard about some significant increases in home and auto rates, not only in Colorado, but across the country. And I've had a lot of clients say, I didn't even fill out a claim. I don't know what's going on. Did I do something? And that's not the case. In most cases, it's not because you've done anything wrong. It's just forces kind of within the industry and more broadly within our world that are driving prices up. So I'm excited to dig into it. So let me introduce our panelists here. The first is Ryan Coon. He's a vice president and personal lines manager for the Rocky Mountain region for Chubb Insurance. He's worked in the insurance world since 2008 and partners with insurance agencies to help their clients find appropriate coverage. So Ryan is our kind of insurance expert from what I would consider one of the premier insurance companies in the world. Chubb Insurance has an excellent reputation, particularly in my world, working with individuals. So I really respect Chubb and appreciate Ryan being available. Personally, Ryan is a third generation Coloradoan. If you're not from Colorado, people like to trace their lineage in Colorado. It's pretty special. And so that's fun to know. Our other panelist is Aaron Ellsworth. He's a principal and practice leader for TrueNorth. He helps lead the Rocky Mountain region for TrueNorth. TrueNorth is a commercial brokerage firm serving the insurance needs of companies and individuals. Aaron has significant experience in underwriting and working with clients to help identify the best coverage for their needs, both on the commercial and the personal side. So I'm thrilled to be joined by Ryan and Aaron. Thank you both for joining us. And as I mentioned, Summit Hill Wealth Management is our firm. We work with high net worth individuals to help them, prepare for retirement, manage their wealth. And part of what we do is dig into details on what could help or hurt the family. So, for example, we want to know that your estate planning is set up. We want to make sure that we do proactive tax planning. We want to have a plan for retirement. Of course, managing your portfolio is important. And one of the things that surprises some clients and potential clients is that we want to talk about your home, auto, and umbrella coverage, because it doesn't really matter how well your portfolio does versus the S&P 500 if you are in a serious car accident and you don't have enough coverage, or you're in a lawsuit, or your house burns down, and after the fact find out you don't have appropriate coverage. So it's something we care a lot about, and we're thrilled to talk about it. So I want to get started. So Ryan, I'm going to ask you the first question. A Wall Street Journal article last week highlighted a couple in West Palm Beach whose home insurance went from $16,000 a year, they had a nice home, up to $121,000. That was the renewal quote for their insurance company. They eventually kind of worked that down to $33,000, but that was double what they were paying before. They decided to move out of West Palm Beach. So I wonder if you can kind of level set for us, what kind of price increases has Chubb been seeing, not only kind of nationally and around in Colorado?
Yeah, it's a really good question, Eric. It's what a lot of people are wondering. And you mentioned at the onset of when clients receive their renewal increases, or when they receive the renewal, it's shocking to say these days the folks that are receiving renewals are actually the lucky ones. So we're seeing very large increases throughout the country as an industry, but also from a rate increase perspective. Those types of increases are not uncommon, especially in the state of Florida, but even in Colorado. We're seeing a lot of it here, where a client will buy a home and they say it's a $2-3 million home, and they have their budget for that. And when they ask the existing client how much they're paying with company A, that's what's in their budget. And when they're closing on the home and they're looking to secure that insurance, sometimes it is 40, 50, 60% higher than what the current client's paying, even with that same company. So we're seeing a lot of increases throughout the country, both macro, micro level. And we'll get into some of the leading factors of that later on. Did we lose him?
I think we lost Eric here.
Oh, there he is. He's back.
He's back.
Hey guys,
Exactly.
sorry about that. So I think there's a little technical issue on my end. Sorry about that.
No worries.
So Ryan, you were just talking about the type of increases we've seen. Aaron, I wonder if you could provide any commentary on what you've seen with clients with their renewals as well. Similar story?
Yeah, similar story. Ryan, and both you and Ryan alluded to it, and Ryan said it best, is we're getting a lot of clients that will flat out just not get offered a renewal from some of their insurance. Especially in Colorado, you're gonna see this buzzword right now is wildfire scoring. And what a lot of people don't realize, they didn't know, I don't live in the mountains, it won't affect me. I personally live in Castle Rock, and I can tell you that Castle Rock was just given a pretty high wildfire score where a lot of carriers don't want to write in Castle Rock anymore. So that a lot of people are trying to adjust for wildfire scoring, and pricing is going considerably up. And it's really tough because, like Ryan said, a lot of people have budgets for insurance, and it's a very tough conversation to have because you want to make sure you're covered correctly. So it's a lot of what do we do? How do we look for it? How do we find the right carrier and the right coverage?
That's great. So before we talk about how people can, kind of deal with these increases, Ryan, I wonder if you can pull back the curtain a little bit and just help us understand why are rates going up so much, particularly for people who haven't filed a claim or there hasn't been a wildfire around their home. Increases of 30 to 50% seem pretty unusual. So I wonder if you can provide some clarity on that.
Absolutely, Eric. And as I mentioned, it's a question that a lot of folks are asking these days. It's myself included. What the heck is going on with home and auto insurance? And what I have on the screen are the three top factors that are really driving, particularly the home and auto markets. And the first is inflation. I know that's probably what's most common, what you've heard most in the media. And Eric, you asked a question earlier that it's probably the most common question that I get asked is, I haven't filed a claim in 5 years. Why are my insurance rates going up? Why am I being punished? And really, one of the reasons is the insurance industry isn't necessarily a reactive industry. It should be a proactive, a forward-thinking industry, and that rates are built into what carriers expect to pay in the future. Inflation is a large aspect of that. So you can see on the screen here, this is what we've seen on a national level of increases. You can see everything outside of copper electrical has gone up at least double digits. So this alone is causing a rate need in the industry, even if frequency didn't go up in claims, which is not the case. I wish it would be the case, but even if that was not the case, we're looking at these types of rate need that is built into the country as a whole. But for states such as Colorado that have high growth, shortage of labor, and have incurred a large loss such as the Marshall wildfire, where 1,000 homes, over 1,000 homes were lost, these numbers can be multiples of twos and threes higher than this. So this is one of the driving factors that's causing the rate need within the country. And that's just on the home side. On the auto side, it's not untouched by supply chain challenges. You can see the average price of a new car has gone up significantly. The average price of a used car has gone up even more. But you can see what it is. It's $48,000 is not a small amount of money. At Chubb, our average car cost is over $100,000. And with cars these days, the way they're being made, they're very safe. But part of being safe is cars crumble and they react different than they used to. So we're having to total more cars than ever before. Other carriers are having to total more cars before. So a $100,000 car, if you think if a carrier is charging $2,000 on an annual policy per vehicle, that's a lot of years of loss free to make up for that $100,000. We're also seeing, due to supply challenges, the rental reimbursement has gone up significantly. Chubb is a good example. We have $15,000 of unlimited rental reimbursement built into every auto contract. And that's a lot of rental, and you would think you would never get close to touching that. And we're doing that on most cases, just due to the length of time that we're having to repair cars. And then the other aspect, and I understand, I think Eric introduced me as an insurance expert. I've been accused of being an insurance nerd, so this might be a little deep into the weeds, but I think it's important to know. I know folks listening to this call today are some pretty brilliant financial minds. So I wanted to share the factor of within the insurance realm, there's an organization called Reinsurance that insures insurance carriers, and these keep pricing stable. What they do is anytime a loss over, let's say it's $1 million or $2 million occurs, they cover the rest of the claim. So these are large scale losses. This industry has increased the amount of their attachment rate, which is like a deductible, but they've also doubled their rates for insurance carriers to participate. So a lot of brilliant minds, you understand that if the reinsurers are doubling their rate and reducing their amount of attachment, that is naturally going to trickle down to the insurance carriers, which is naturally going to trickle down to the end consumer. So that is an impactor. The very last thing I wanted to mention is the size of claims that we're incurring throughout the country. You can see 18 separate billion-dollar events occurred just last year or in 2022. What's not on there, I know we have a lot of Colorado folks, is the Marshall Fire. That happened so late in the year, we couldn't get it on this graphic, but that is an additional billion-dollar loss. And then another side thing is for the first year ever, the industry has incurred over $1 billion of dog bite claims, which is, I think, another new trend. So those are some of the factors, Eric, that are contributing to some of the rate increases, not only in Colorado, but throughout the country.
Ryan, that's really helpful. I think people often look at things like rate increases and think, these insurance companies are just out of control. They're just making tons of profits. They're just, kind of benefiting from it. But that doesn't seem to be the case. It seems like there are kind of external factors with cost of homes, cost of cars, cost of reinsurance that are pressuring insurance companies. And it's not just one, right? It's kind of across the board.
That is so true. And I think it's a stat that my dad was asking me the question, what the heck is going up with auto and home insurance just the other week? And a stat that I shared with him, Eric, was the industry in Colorado. So every carrier combined in the state of Colorado, for the last 5 years, on average, every dollar of premium taken in, we've paid out $1.25 as an industry. 5 years in a row, that's not a lot of industries. You think of a restaurant doing that for 1 year, let alone 5 years, could survive. So that's why we're seeing insurance carriers really taking a fork in the road of either rate increases or exiting the market. And another thing is, I think that intrigues me, is that 125, that's outpacing the U.S. countrywide average by about 20 points. So it is, Colorado, it's a tough state right now.
Yeah. And Aaron, I wonder if you can elaborate a little bit more on carriers that you've seen have, maybe stepped away from Colorado or have, kind of taking we're probably not going to renew. We're technically in Colorado, but we're kind of not going to renew. Well, Aaron, what have you seen, kind of across the state?
Yeah, I mean, go back 20 years ago, we used to have a hail problem. and hail's always been a problem. Ryan and I are natives. A lot of people have been, here for a long time. It always hails in Colorado. Now, the difference between 20 years ago and now, what used to be a field, now with the urban sprawl, is a community. So we're seeing a lot of carriers that are absolutely getting crushed, 100, 125, what they call combined ratio. So we're having carriers, there's some very well-known carriers that we're not writing any more new business until we figure this out. They can't take enough rate because the Department of Insurance caps how much they can take rate here in Colorado. They can't take enough rate per what their filings are. So they've either stopped new business, or we just found out 2 weeks ago that there's a large carrier that's going to get out of the market in general. And that's big news. And Ryan and I were talking, you give me a crystal ball and you ask me what's going to happen the next 12 to 15 months here in Colorado. I think we're going to see a lot of the same. I think we're going to see 3 to 5 carriers exit Colorado. Now, I don't know if that's going to be on the independent side. I don't know if that's going to be on, the captive side, like the State Farms, American Families. We saw some news earlier this year that, the State Farms of the world got out of California and Florida because they were just struggling making money. Colorado's right behind that. So if you're really looking at how do we figure out how to make money to survive as a company, people are going to be taking a hard look at Colorado, which is going to make it tough. So that's what I kind of see is we're going to see this market tighten up some more. I would have said 4 months ago, we would have been out of this mid 2024, late 2024. I think what sprung this to make it even worse was the fires in Maui. I think that just was a wake up call for the entire industry to say, we just had a fire on a tropical island. If it can happen there, there's no place that's going to be safe. I think we're going to have this kind of insurance well into 2025. And I think there's going to be, people are going to have to start thinking a little bit more creatively. I think the ways of how people were buying before of let me go find the cheapest rate, those days are gone. And the days of I'm going to insure absolutely everything, you're going to have to really figure out, well, what do I need to insure? What do I need to risk mitigate? And what am I going to self-insure?
Yeah, that's a great point. So let's talk about what people can do for their own coverages. We've painted kind of a challenging situation, right, for the carriers themselves, paying out more than they take in. We've got some kind of larger issues in terms of inflation, and we have carriers kind of stepping out of the market. So first, maybe we take a step back. If people are thinking about their own policies, Ryan, I'll start with you. What are some of the kind of top 2 or 3 things that you think are problems or issues that you see with people, their coverage in general? And then I think we'll get down to say, what can we deal with in terms of price increases? But just in general, what are some problems or issues you see? And then Aaron, I'll ask you the same question in a second.
Yeah, it's a great question. I think a few things I see are, I think I see a lot of clients still that have a deductible threshold that is lower than it should be. You mentioned what your clients are seeing with rate increases that have not incurred a loss. I can tell you the ones that have incurred a loss and have either had that surcharge or had to get remarketed, they're paying significantly more. So I personally, I like to think of insurance deductibles as a long-term financial investment. It pays off in the long term if you're willing to take those. I also think clients, and I think this is probably on myself and carriers in general, is there's clients have been slow to adapt automatic water shutoff devices. We talk about hail, we talk about fire and flood, but 45% of every claims dollar that's paid in the insurance industry comes from the leaky toilet, the leaky sink, and it's the number one claim. So a lot of folks don't understand that for $200 to $500, you can get an automatic shutoff device that provides you an 8% annual discount. And that's a really great way to keep premiums down, reduce claims, and again, long-term, keep your insurance in check.
Yeah, I love that, Ryan. I like to tell clients that their deductible is kind of sending a message to the insurance company on how often they intend to file. And if you have a $250 deductible, you're kind of thinking, I'm going to file frequently and I'm going to make these small claims. And insurance companies hate that. My impression is maybe 8 to 10 years ago, you could file a windshield claim and a tow and a small little fender bender. And insurance companies would kind of say, you've been a client for a long time. No more. They are taking all of those small claims and using that as a reason, I think, to increase. So yeah, I told clients, think about $1,000, think about $2,500 is kind of the minimum. Save up for it, and you're sending a message to the insurance company saying, "I'm going to take care of the small stuff." So I think that's great.
Love it.
Yeah, Aaron, what about you? What kind of issues do you and your team see with people's policies, just in general, either missed areas or things that could be improved, like deductibles?
Yeah, I'd piggyback off of Ryan. Water sensors and automatic water shutoffs. We put it all throughout my entire house. And so I have an automatic water shutoff that is triggered by water sensors. And I have a water sensor by every toilet, by every sink, by hot water heaters, by the sump pump, by everything that goes. And I get notifications every time that sensor goes off. I mean, they're so sensitive. My dog licked it and it went off. So they're great. And you don't have to get into the plumbing. The one that we got off of Amazon, don't have to get into the plumbing. And as soon as it gets a sensor, it automatically goes off. So it's a peace of mind thing. Cause I'll tell you, the first thing I used to do when we got back from vacation, literally walk downstairs to make sure there was no water in the basement. And now it's kind of don't have to worry about that. So I do think water is a big one. The other thing I see is, working with an agent that knows what they're doing, right? And I'm preferential to independent agents because at the end of the day, they're working for you. And what I always say, and I try to equate it to the same way you do your taxes, right? When you start off and you just got out of college or out of high school, you don't really have any assets, you don't have anything, you start doing taxes on TurboTax. So maybe that's the equivalent of that is maybe you go to Progressive or Geico and you get your stuff. And all of a sudden you get married and life gets a little bit more complicated. Maybe you have a child, you got some things to protect. All right, now I maybe go from TurboTax to H&R Block. So maybe we go to State Farm, Farmers. Now all of a sudden I've built up some wealth. Now I've got a business to protect. Now I've got a whole family to protect. I got a lot of assets. It's gotten complex. Now you're going to the CPA that knows, like, let's think outside the box. Let's figure out a personalized strategy for you. And that's how I equate an independent broker, right? Let's look at what you have. Let's find the right carrier that's right for you, whether it's deductibles, right? I'm with a carrier and there's one specific coverage that I want, and that is UM/UIM on my umbrella. So when I went around, I was doing my own risk analysis. The biggest risk I have life insurance. We have umbrella to protect other people. But if I get in a car accident and I get hurt and I don't die, but I can't work, I'm a single income family. That is a huge issue. So having a $5 million UM/UIM, that was the only thing I'm looking for, because that was my biggest area of exposure. And that's what you can get with a broker to say, let's really talk about what do you need? What is it that we need to protect? What is it? Okay, you can handle a $5,000 deductible on your car. It's okay. Insurance is made for a catastrophe event. So can you cash flow it? Can you, all that stuff. If you can cash flow it, let's up that deductible a little bit. And then you start putting in those measures of, and that's what you get with an independent broker, is those measures of the water shutoff valves, the water detection system. Hey, let's upgrade our roof. Let's put all these different things out there that we should have, that you should be taking care of.
Yeah, I appreciate that. And I think you described it really well, Aaron. I think it's looking at coverages, taking a step back. It's not necessarily about, maximizing coverage in every single category. It's kind of thinking, well, what's going on with you and your family? And then what coverages make sense? And, for example, increasing deductibles, I think, is always a good idea. And, reserving personal cash for it as well. But making sure that you're getting the coverage you need. And a good example, Aaron, is, there are some, there's a number of people that drive older cars that run perfectly well. They might have a Toyota, Honda, has 175,000 miles, but they may not want to pay for comprehensive because if the car is totaled, the Kelley Blue Book value or the, actual cash value may be less than, the deductible. And you might think, it's not worth paying $2,000 or $3,000 per year for a premium for that car because it's so old. It'll run well, but just save money to replace a car and just save yourself the premium on that. And I think that's where an independent advisor, like yourself, really, really helps.
And it's finding, truthfully, at the end of the day, here's what I was telling people: you find the right broker that's looking out for you. For us, I'm not trying to make anybody insurance poor. I got some hard lines to say, here's what I will and will not do. And those are kind of non-negotiable. At the end of the day, I don't care if you spend $500 in insurance or $100,000 in insurance, right? We got to make it what's right for you.
Yeah. Well, we're coming up to kind of the top of our time. I just want to thank our participants. As you are listening, we would love to hear your questions. So there is, kind of a Q&A box on the bottom. So feel free to type in a question. But while we're kind of wrapping up, we'd love to see them. I'll kick it off, and just ask each of you, to the topic at hand, if a family is facing, some pretty high renewal rates, I wonder if you guys can elaborate, other ideas that they can that they can look at. We've already talked about, I think, one of the best, which is deductibles. That's something a family can control. But other ideas, Ryan, maybe I'll talk to you. What ideas can families can take to kind of deal with high renewal rates?
It's a good question, Eric, and I wish I had a really great answer. I think right now, I think we all have to understand this is a really hard market. So as long as you're working with an independent agent like Aaron and his team, you can rest assured that you're going to be covered from all angles. I think one thing that we all need to do as well is think of insurance as a long-term and holistic, in that insurance, you could think about your insurance premiums, but also your long-term insurance payments. So Aaron mentioned UM, UIM. Think of it long-term of, yeah, I'm paying $2,000 of insurance, but if a hail claim happens, how much would I recoup? Would I be made whole? And think of that not only in your purchasing, but in taking in. But I think to answer your question, one thing I would say, Eric, is to be sure you package as many policies as you can. It's a really good way to make sure you're maximizing your value.
Yeah. And Ryan, I should clarify, we've heard the acronym UM, Could you guys clarify what that is?
Good question. Yeah. Uninsured, underinsured. And by the way, Colorado is a top 10 state in uninsured drivers. And I'm sure we're probably way higher in underinsured. So it's a very, very important coverage.
Yeah, it is. And what I find is often, sometimes I'll see clients that are a little underinsured in those two categories, and underinsured and uninsured. And what I find is that we can often move their coverages up. And if we increase their deductibles, usually their premiums don't increase quite a lot. So they get more coverage, but it's not a huge hit to their pocketbook.
Yeah, I think it's important to note Colorado state law. People can drive on the road legally with a $25,000 per accident kind of policy. That won't even cover an ambulance trip, right? Or a $15,000 property damage. That won't cover many cars. So that's why that underinsured, uninsured motorist, especially Ryan said, I think the statistic is there's 51% of the drivers have state minimum limits or no insurance that are on the road here in Colorado.
Wow, that's crazy. We got a question. Why is Colorado one of the higher states with underinsured motorists? Is there a reason for that higher statistic, Ryan?
You know what? I can't say for certain, but what I've noticed in looking at the states that do have that are on that top 10 list, these are states that there's a lot of folks moving into. So naturally, if you're moving from out of state to Colorado, sometimes there's a bit of a gap before you get insurance at your old state to your new state. And then sometimes when you're moving to Colorado, you don't really understand the cost of life in Colorado until you get here. And unfortunately, what people tend to do is when they're pinching their budget, insurance falls onto that limit, and that's why we have so much.
Yeah. Yeah, I know. I had a friend who was in a serious car accident. She was T-boned, and the other driver was driving illegally without a driver's license. I believe they might have been here illegally, and she was just kind of exasperated that her insurance had to take care of the whole thing. Her rates went up. The other driver didn't have a license, was driving illegally, didn't have insurance. So not that that's the full story, but she was kind of shocked that she would get in an accident, and the other person basically tried to drive away, without a license. And she, the car was disabled. The cop came, and the cop's like, "Well, I got some bad news for you. There's no insurance here." So yeah, it can happen. Yeah. Yeah. So we have another question, and I throw it out to you, Aaron. Do you have guidance on how much kind of coverages people should have on the auto side? I know this is a question that comes up pretty frequently. Often insurance companies quote it on kind of a per person, number, and then also kind of a total accident number. But do you have guidelines that you recommend to your clients, Aaron?
I get asked this question a lot, and no one really likes my response. And if you get anything other than this, I actually think they're lying to you. A lot of people ask me how much insurance I carry, and my question back to them is, who are you going to hit?
Yeah.
Right. You hit, someone who's retired and all that stuff. hey, maybe 100,000 is going to do it. You hit the med student who's residency for surgery and no longer can earn a living because they can't do surgery anymore. 5 million might not be enough.
Yeah.
So I always look at it and say, we don't want to overspend, but let's be accurate. So a lot of the time it's working with their wealth manager, say, what's the total value? Like, what's their net worth? How do we start justifying it there? How do we try to protect it? But at the end of the day, it's a very hard question to answer. And I always tell people, you got to be comfortable with it, right? We have to be comfortable. And some of that might be, do you have teenage drivers? You have teenage drivers, I'm probably going to tell you to increase that a little bit more, as I've seen friendships end because, one story was 16-year-old kid is doing donuts in a parking lot, hit a dry spot, all his buddies in the car, flipped the car, and his best buddy broke his leg. That's a $2.5 million claim, and they're not friends anymore.
Wow.
So it's real.
Yeah. Yeah. I'll just add, my own experience just working with independent, brokers like yourself, Aaron. I find, just educating clients, when you look back at their claim history, often I see windshields, towing, kind of small, parking lot fender bender claims. And I'll just encourage clients to say, we want to get your deductible high enough that you never talk to the insurance company about these things. And I've recommended clients think about AAA. For towing, and basically pay for windshields yourself, pay for towing. Just don't talk to the insurance company about anything that is small. And ideally, if it's $2,000 deductible or $2,500 deductible, that should kind of answer the question. And I think 20 years ago, clients were used to kind of calling the insurance company all the time. Like, what about this? And my experience is, if you call the insurance company and inquire about something, the insurance company often will make note of it. And come renewal time, they're going to be like, hey, well, you at least asked about this. Your rate's going up. What I like is, Aaron, when you're in the equation, they can call you and say, hey, what should I make a claim? And an independent advisor will say, no, don't make that claim, or yeah, it's a big claim, you should do it. And I think clients often forget that they usually have a year to make a claim, so they can pay for it, they can talk to an independent advisor. They do not need to get on the phone with their insurance company 20 minutes after a fender bender, which I think a lot of people do. I'm calling the insurance company, I've got a cracked windshield, and it's like, do not do that. Call an independent broker, talk it through. If you need to get repairs, if you need to get some medical care, get that done. But do not file these small claims. So that's my 2 cents. Increase the deductibles. Do not file the small things, and then also work with, I think, an independent advisor to look across different carriers. I think that's, you don't just take what you're given. If you're a carrier saying, hey, your rate's going to double, you don't have to do the legwork and make 12 different calls, but talk to someone like yourself, Aaron, and your team to say, can you kind of scour the landscape for us?
Yeah. No, it's well said, Eric. And the one thing I would add to your claim scenario, if it's if no one's hurt, then there's no need to rush into that, have that conversation. If you have a bodily injury, if someone's hurt, report it, right? Because then all of a sudden, the faster we get the facts and faster we get statements for bodily injuries, that's going to come out a lot better.
Yeah, that's great. All right. Well, we are, kind of finishing up. I'll just ask our audience if we have any questions, please, please share them. But any kind of closing thoughts for both of you? Ryan, I'll start with you, but any other closing thoughts for people that are frustrated by this? Anything we haven't shared yet?
Well, I'd say hang in there, because things will get better. I know it's been a hard 3 to 4 years in the insurance market, but the pendulum swings, and I think it will come back. In the meantime, I think you and Aaron both said it best, and the best way to make sure you're properly insured and covered is to work with an independent agent that knows the ins and outs of what's important to you, and every carrier is different, and they'll get you to the right coverage. Yeah,
that's great. Aaron, any kind of closing thoughts?
Yeah, I think have a conversation with a trusted advisor, an independent agent, or someone that you trust, and start thinking about insurance a little bit differently, right? What are things that I can risk mitigate? So what can we do? And a good insurance advisor will be able to give you ideas of, let's do this, right? How many people have the Ring doorbells, and for what, $5 more a month, you can make it centrally monitored. All of a sudden now you got a centrally monitored, video camera. There's some discounts there, right? So let's talk about this. And the other thing is, hey, your roof might have been replaced in the last 4 or 5 years, and you thought your insurance carrier already knew about it, but they still have it as a 20-year-old roof. Look at that. That's going to be a huge discount. Not to mention you get a lot of coverage back. So just,
Yeah,
work through
oh, that's great. That's great. And I'm just typing Aaron's contact information in the chat for any of our audience members. If you're interested in having your coverage renewed, I recommend TrueNorth. They do a great job. We have a number of clients together. Aaron and his team will be able to take a look at your coverages, give you an independent view, kind of a no hassle view, and just give you ideas on your coverages, on your carriers. If you're frustrated by this, can't recommend them enough. And then if you have a question more broadly about your planning, if you're not sure if your plan for retirement is in place, if you've got questions about your portfolio, I'd love to talk to you. You can reach out to us at info@summithillwealth.com. So I don't see any more questions. Let me just double check and see if we're missing any. I don't see anything. So again, I want to thank our panelists for taking the time, addressing a tough situation. Ryan and Aaron, thanks for your expertise. Again, I encourage people to reach out to Aaron and his team, get a quote, talk about your frustrations, find some solutions. If there's anything more broadly you'd like to talk about, we'd love to talk to you. So thanks, everyone. We really appreciate your time.
Thanks, Eric.